We saw something that we thought like was the stable coin, is the stable coin USDC, well known, for holding its peg, holding its value of one to the dollar. And we saw that deep peg. We saw it going all the way as low as 88 cents, which is crazy to see. And the reason behind it is that they had some exposure to Silicon Valley Bank. They had 3.3 billion of their reserve in Silicon Valley Bank. And then, as we covered in last week's show, Silicon Valley Bank's was, we didn't know at that stage that they were going to be bailed out, and they were really the bank of these type of venture funds and all these type of technology companies. If you had a technology startup, you probably had a bank account with SVB. And the nice thing about them was they were actually a very big Web2 bank before crypto at all. I mean, they were a normal bank. They're top 16 bank in America, and they were just well favored because they were in San Francisco, where all of this happened, and all of these sort of venture firms they were well known for being very friendly to technology companies. So a lot of people were affected by this, but then we had the government come out and they said, look, anyone who had any money with SVB, whether they be a person or a company, that money will be underwritten by the government. So if you had $1 million in SVB, you can withdraw $1 million, the government will make sure. Now, remember, by default, you only covered up to $250,000. If you had $2.5 million there, you could have effectively lost everything except for 250,000. So in a roundabout way, the irony is that the US government, by saving SVB's deposits and underwriting them, actually ended up bringing USDC back to 1-to-1. So even though government's been so anti-crypto, they had to save SVB, because if they don't underwrite those deposits, there would be a bank run on all the banks in America, and everyone will be in massive, massive trouble. The government can't afford for that to happen. Now, the irony also is that they've been printing in the last week, and we've got the Fed printing again, $2 billion again has been put back in by them underwriting this. And we've literally gone from a stage where we were tightening all the way back to pre-COVID or just when COVID happened, where we're printing again. And that's really why we're seeing the crypto price doing what it is doing at the moment and being so bullish, because this is when the Fed started printing during COVID, that was the beginning of Bitcoin 10xing. And that's what's happening now. And that's why we're seeing this happening. Now, it happened really quick. People were thinking that the interest rates would be cut another, hiked another 50 basis points this time around. Now people are saying there probably will be no hike, and if anything, it might be even cut. So we've pretty much, in the last 7 days, completely turned over from where we were. And that's really quite bullish for crypto. We've turned a corner, in effect.
Dude, I made some content about this whole government bailout stuff. I just love thought-provoking content, because there's so many ways it could go. When they said they're going to bail out all the banks too, I was like, damn, a lot of money you're going to bail out. I don't know how that's going to happen. They're like, oh, taxpayers, like taxes. And I was like, what? Taxes? Like, I don't know about that, dude. So I don't know. I would be very interested to see.
No, so they specifically said it's not coming from taxpayer money on the US side. Okay. They specifically said that. Okay. Whether so it's coming out of the insurance fund that's for banks, specifically underwritten by the Fed. Whether because of this, the banks have to pay higher premiums going forward, that will eventually be passed on to the banking customer, that remains to be seen. But they specifically said that it's not going to be from taxpayer money.
Do you hear that? I hear like a printer. I just hear a printer somewhere. I just hear like a guys. If you're enjoying this show, please hit that retweet button, and if you're in YouTube, hit the comments, the likes, subscribe to Philip's channel. By the way, if you're enjoying this conversation, because this is a fun one. It's it's fun every single fucking week, honestly. But dude, the idea that the government can just keep doing this kind of stuff, saying, oh, like we'll just pay it off later. I'm like, bro, you're already $45 billion trillion in debt. What do you mean you're gonna pay it later? You've never paid off anyone ever. Like, you're already trillions of dollars in debt. Like, that doesn't even make sense. I'm down though. I'm down for them to give me money too, like UBI. Like, listen, sign me up, bro. I don't know how it's gonna happen. I'm sure my life will get tremendously worse once I sign up for all the conditions that I have to meet to get an extra $1,000 a month. But I'm excited, man. I'm excited for. Well, I don't know if excited is the right word, but I'm looking forward to seeing how the world develops and changes over the next 5 years.
Listen, this is not so positive in general. I mean, because this is the reason that we had all the tightening for the last year was because they printed money like they're doing now again, and that devalued the dollar, the real value of the dollar, which is not good for the average consumer. It's good for crypto,
Right.
for Bitcoin specifically, because Bitcoin's whole thing is that they've got a limited supply. There will only ever be, I think it's 2.1 million Bitcoins or whatever it may be, and they can't print more. So I don't understand why it has to be so extreme. Why do they have to print so much during COVID? That almost half the total American dollar supply was printed in a couple of weeks, and then they have to so sharply hike rates and until they break every single bank, and now they have to quickly start printing trillions of dollars again. Why does it have to be so extreme? Why can't it just be slower and more cautious and less crazy? It just makes it volatile. And the one person who was buying USDC when it depegs was Vitalik Buterin, the Ethereum co-founder. If you follow his wallets, he was buying a lot.
Wow. At what number?
So he bought at a 5% discount when it was 95 cents. He bought $286,000 when it was 95 cents. He then did 2 transactions for $28,000 when it was a 7% discount. And then he took another, I mean, it's not huge money when you think of how much the guy has. And then he took a total of $85,000 when it was a 12% discount. So you can see even he was starting to get worried. He slowly was taking less and less as it went lower and lower. But yeah, man, it just shows you, I mean, that the right move to do there, if you ever see something like a USDC depegging again, the right move to do, if you know how to do it, is to just short it. Because the chances of it going to $1.1 is nothing. It's never going to be worth more than one. So you put a stop loss at $1. When it gets back to normal, everything's good, but you short it. You say, as it goes down, I want to make money. So your downside is that it hits $1 again, which it will do at some point, and you get stopped out. Maybe if you shorted it from 98 cents, you lose 2% if it goes to $1. But if it carries on dropping and it drops all the way to 88 cents like it did, your upside is you made a huge amount of money. You 10x pretty much. You got 10 times the leverage that you would have got on the downside. So that was the play. The play there, if you know how to do it, which I need to learn, because I don't, is to have shorted as soon as you saw it depegging with a stop loss.
Yeah, I mean, dude, I'm literally learning trading stuff. So all these words, I'm like, damn, I've been hearing a lot of this stuff recently. So I'm excited for myself to be trading. But I think you're very much on point right there.
For sure. All right, and then we've got